Alright traders, hope you had a good week. It is Friday, October 1st. So let's recap this week because it was quite the doozy here. So, we'll look at a weekly chart here, and once again, you do find support here at your weekly 21. However, based on the daily chart, just with the structure here, under the 21 EMA, red 10x bars, negatively stacked EMAs, until we get a good 2 to 3 closes back above the 21 EMA, you probably want to look at this as a short the rip market. And if you're a newer trader for like the last year or so, say you got like a year or so of experience under your belt, pretty much all you know is this buy the dip market. Now, all we're looking to do here, and again, it's kind of the structure, the momentum of things that determines which way we're looking to play the ebbs and flows of the market. But again, until this structure changes, you're looking to play the ebbs and flows of the market, I think personally, to the downside. So what that means is you want to pick your spots as wisely as we do when we're getting long. Typically, when you're getting long, your best entry in that trend is going to be the entry at the 21 EMA, and we like to take them profits up there at 2 to 3 ATR. So it's the same thing here to the downside. Ideally, you short at the 21, and you take profits into 2 to 3 ATR. So don't do what most retail traders are going to do, which is short in the whole. Meaning once a market rolls over like 2 to 3%, then they think about buying some calls. It's usually a little bit too late. So you wait for the bounce into the 21, you wait for the rejection, then you short the next move down to -2, -3 ATR. So with a pretty good bounce here into the close, I think you look to see if we can get a little bit of follow through next week. And again, if you get up there to the mean and you get rejected, there's your potential short at that point. But looking across the board here, again, regardless of whether or not we're holding weekly support, the daily structure leaves a lot to be desired. So with the QQQ here, it's just pretty nasty. You could look at the industrial sector. It is pretty nasty. The utility sector. So there's a lot of breakdowns here. A lot of good-looking daily charts, and a lot of important daily charts. A lot of daily charts and sectors that have played a really big role in this trend here, like the semiconductors. Structure and bullish momentum has been tossed out the window. The communication sector, one of the better trends in the market, that lost structure. Healthcare, that lost structure. And obviously technology, that breaks down as well here. So again, until there's 2, 3 solid closes back above the daily 21 EMAs, until you start to see positive histograms, until you start to see green 10x bars and positively stacked EMAs, I do think we're in a short the bounce type of market here. So I'll be looking to potentially get a few trades on the indexes. Shorter term call credit spreads if we can get a bounce here next week. But to kind of recap, what we got going on here on our end, and then in Sunday's video, we'll get a bit deeper into a few potential spots for some trades, some shorts, and believe it or not, potentially a few longs here. But this week in the Compound Growth Mastery, we took profits here on Home Depot. Which, we're getting long back here. We're sitting through a chop fest. And when the market is rolling over, it's down 2, 3, 4, 5, 6%, it can be tough to hold long positions. Even when they don't really do anything wrong, it's just kind of the environment can really trigger a lot of emotion. But we didn't break structure here. And we got that paycheck there earlier this week on that nice push. Obviously, not the market environment to be greedy here. And if I was greedy and kept this in for a little bit more, I'd have some folks looking for me. So good profits there on Home Depot. I think we got about 70% of max profit on that spread. And then, really like the needle in the haystack here. One of the gems of this market as far as where you still have bullish structure and a lot of momentum is Netflix. So we took a position here in that daily squeeze, sold some put credit spreads, and you also had a 4-hour squeeze here, which just held up remarkably well given the overall market environment, and that gave us the push that we needed there to take profits on yesterday's move into all-time highs. So we hit some Netflix there, and now for open positions, in the Mastery, we do have a put credit spread here that we picked up back inside that daily squeeze on Tesla, and it does a good job of holding structure this week. So you might have not gotten the big explosive move, but compared to the rest of the market, this holds up really well. So you got a daily squeeze here, you have a weekly squeeze currently firing long. So you got some similarities here to a Netflix, but what I would look for potentially into next week, and you do have the delivery numbers coming out this weekend. So, we'll have a few discussions in the Sunday video about a few potential put credit spreads here using something like that 2-hour squeeze, things of that nature. But we do have a position there in the mastery with a 745 by 740 put credit spread. So didn't hit our target here this week. So still got that position. And then for myself, I got a few more here. So we're still holding some Tesla, and because I do think the path of least resistance for just the market kind of across the board here for October could be to the downside. We do have a call credit spread here on the IWM. So if the market bounces back to the 21, this is going to come against us in the short term. I'm cool with that coming against us in the short term. If the market is strong enough for a few days to give something like a Tesla the green light that it needs here to really get that move through 800 we're looking for, then we're taking some solid profits. But that's it for open positions here. So if you kind of kept your shirt this week, good job. I'd say if you're closing a few profitable trades this week, really good job. But that's where I think we're at. I'm not the kind of trader, and I don't think you want to be the kind of trader who has so much an opinion or what they think is going to happen. I kind of rely on structure, and I kind of rely on a few different tools here to help me get a better gauge of what's the path of least resistance. The current picture getting painted here leads me to believe path of least resistance is to the downside. So I'm playing the same game that I typically want to play, taking positions at the 21 EMA and taking profits on the push away from the 21. It's just the momentum and the structure here implies I'm going to have an easier job doing that to the downside. So look forward to this Sunday's video. We'll run a few scans. There's probably not going to be really shit setting up out there. Excuse the French, but there's probably not going to be too much setting up out there as far as good-looking bullish opportunity. But Netflix and Tesla are a few spots we can price out a few different put credit spreads on. So looking forward to that this weekend. And then we'll talk call credit spreads, because I think that might be the easier trade here. But I wanted to cover kind of where I think we're at here. Short the bounce type of market until you get 2 to 3 closes back above your daily 21 EMA. So stay tuned for Sunday's video. Stay tuned for next week's morning preps on Monday, Wednesday, and Friday, because I think we've got a lot of work to do here as a team. So enjoy your weekend. Hope you had a good week. Talk to you soon. What's up, traders? This is Taylor from Focus Trades here with simplertrading.com, and as always, I appreciate you watching our videos. If you happen to enjoy this one, go on ahead and like and comment down below, and if you're not already, make sure you go on ahead and subscribe and click that bell icon. That way, whenever Chandler and I upload a video, you'll get a notification once it's live. And if you want to watch us trade live with our own money Monday through Friday, you can check us out at simplertrading.com. See you in the next video.